I talk to a lot of investors and they end up buying stocks when they should be selling it. And that is a very common mistake. And in this video, I'm going to share with you powerful two approaches. If you understand this, it will completely be a game changer for you. And I call it a peaceful power play, which I'm going to share. And if you look at what's going on in this, everybody calls themselves an investor, but basically they are kind of price action, momentum investors. In this particular chart, as you can see, there's a value and there's a pricing. And sometimes an underreaction because that's how the market participants behave. Then there's an overreaction. Then there's a public participation herding, and then the overreaction. And we end up buying stocks at the overreaction stage and we lose a lot of capital. And I kind of kept it very simple. I'm going to share with you two approaches at the end if you stay till the end, which will be super powerful. And let's get started with this particular video. My name is Shivendra Bhatia, and I'm a follower of Peaceful Weekend Investing approach, which is investing with a plan, not with a feeling. I'm on a mission to help busy professionals like you to invest in stock market like a pro. So with that out of the way, first thing first, what is the overall framework we're looking at? It's like a complete, the framework or complete ingredients for any market if you want to make um, money out of it is PVT me framework. And you apply this particular concept not only in stocks, but you can apply in any kind of investing approach or any kind of asset classes. Largely, I'm focusing on stocks, so I'm going to talk about that. So if you look at what P stands for price, right? Any stocks will fluctuate like in cardiogram, where price will go up and down. And then what makes key ingredient of price to move is a volume, or go down also volume. A lot of selling, a lot of buying, the price will move. But then what happens is at what is the time range of that price movement is very important. If something happened 1 year ago, it may not be relevant after 1 year. So time is also important. How quick there's a price movement with what volume, and the time in what factor, whether 4 weeks, 3 weeks, 1 month, 3 months. So PVT me. And what is me stands for? Me stands for market environment. Right, you need to understand the context of what we are working with. We are context with working with market environment. If there is, a whole lot of geopolitical equation changing things, you have to understand that. Like obviously, everything reflects in the price, volume, and time. So you have to respect that and work towards it. So this is our framework of Peaceful Weekend Investor called PVT Me framework. So that is the ingredient. If you mix all of them for different asset classes, you will be able to bound to get some kind of framework which will work for you. And that's what we want to cover. And I call it, like, for example, if you see this Indradhanush and kind of this image, AI image, where you see there you have different arrows. You have to have a specific arrow you have to use at different times. And today what we want to cover is two clear approaches of how you look at buying. And I'll give you with examples as well. And clear disclaimer, no buy and sell recommendations. So remember, I want you all become a peaceful superheroes. If you are new to my channel, type in "you are peaceful superhero." I am PS, peaceful superhero, if you want to type in below. So let's get started. I'm just a facilitator. I'm trying to give you some new lenses. I've learned it also in the journey. I thank everybody in that journey who has supported me. So that is what my goal will be. So let's take this example. Okay, I've not put any name to this particular stock, so just so that we can look at it more in an objective way. And if you look at it here, and if I grab my pen, or so if you see, this is where the volume at the start of this particular volume, you see there's a lot of buying happen. So there was a lot of power in this price movement with the volume, and then it went in the sideways movement, which is kind of, you see the representation of this particular box. But volume at the same time also dried down, right? So that was the start of the stage of this rally. And then it is basically all the weak hands going out, and market environment could be also different at this stage. So you have to look at it from that context. But then suddenly what is important is the follow-up buying. And what is important is to understand what we are trying to do. And I'll cover those important points at the end. But just be with me and follow my arrows so that you can understand. There was a big follow-up buying happening and stock went up, right? But then suddenly stock came crashing. With volumes were not that huge when it came down, And that could be because the market environment were changed. The price action was there, the volume was there, but then it came down. Now, after it had we call it at the hindsight is shakeout, right? But as you can see, it was still respecting the trending moving averages, and after that, it again gave you a nice base to enter, and then thereafter it started forming base over base, base over base. You had one base, two base, and three base, and then huge follow buying. So you follow buying. So you see, this is the pattern: price, volume, time, and the market environment. You have to understand all of that in this example, which had everything, which stock went from 61 straight to 268. So you made a multi-bagger return in just matter of from starting in August, September, and you are in 1 year time you are made multi-bagger returns. And that is the power of understanding this. Now let's come to the point of what is the entry system. Now whatever I'm going to share here, it's all going to be, our job is to make sure the entry systems improves the odd in our favor, right? Nothing is foolproof, nothing is guaranteed here, right? So that is very important. And it is so important that you would sometimes think this is like God thing. Nothing like that. I am not at all can't predict it. We just follow our systems. What is repeatable, that is important. A lot of people get hindsight of looking at things which has gone up huge rally, and that is not the way. You have to look for systems which are repeatable in process. Now the two systems are anticipation setups and reactive setups. What do I mean by that? You have to anticipate. It is not you're anticipating things will happen by looking at past trends. You are not predicting. There's a difference between anticipation and prediction, right? Keep in mind. And what we anticipated with that example is that first box, that shakeout was a normal shakeout which can happen in stage 2, early stage 2 or basis, when stock is going in trend, and all that we covered in I've covered in previous videos. You can watch it. And you are trying to anticipate and positioning yourself early. That's where you be at peace. And but sometimes a lot of people, what I see, is reactive in nature. Like there's a breakout happens, you start buying into breakouts. That means you're reacting to the price and doing it. You're not predicting, you're not anticipating it, right? I should not use the word predict because that's not the game we're playing. And that is the two different setups which we work on: anticipation setup and reactive setup. And what is the most important aspect here is that I try to be always in the side of anticipation, because that gives me a lot of peace, because I'm positioning early. If things doesn't go in my favor, I exit quickly and move to the next one. But if I'm doing reactive, that means I've left some money already. That means I'm reacting to it. It is not in full control of it, and you end up buying when things have moved up a little bit. So that is something, a difference which you have to keep in mind. But then you look at what is the core aspects of it we are looking at. We are trying to focus on identifying two things: institutional footprint. What we saw, the follow buying, all that multiple follow buying in that example, is the institutional footprint. The prices move because somebody is buying at every level. Somebody is buying at every level, not you and me buying every level, right? So that is most important, and that's the footprint of it, that will keep going higher. And second is market structure. When you say market structure, you're looking at structure which I try to explain you, the whole base over base formation, the structure of what it is. That if you understand that, you just have to replicate it. That's it. If there was an aha moment, type peaceful. That way at least I know that you got an aha moment on that. And that is the important aspect of you understanding that focus on anticipation, not focus on reaction. That is your game. And focus on PVT framework: price, volume, time, and market environment. If you mix all that, you will have a right strategy to go in this. So this is a small step towards a peaceful weekend investor journey. And my name is Shivendra. If you find the value in this particular video, I would highly urge you to subscribe to my channel, hit the like, share, and comment below. If you put in comment peaceful, then I know that you got value out of it. If you got some learning, put the learning, what are the key learnings below this video. That will be very helpful. Till the next video, bye bye.